that'll give us some insight into you.
Sure. Thank you, Brad, and thanks for the invite to speak today. I've been now at Intact or ING previously for 21 years, coming up this month actually, and I guess 23 years in the insurance industry overall. Born and raised in Vancouver, graduated at UBC with an undergrad in finance, and actually left school saying, I don't want to work in finance, which is quite ironic. Fast forward 23 years and I'm the CFO, but I actually wanted to work in an industry where I would have more of a general management opportunity. I wanted to work on the analytical side, which was clearly something that drove me, but I wanted to build relationships. I wanted to work with teams. I wanted to work in sales. And I saw an ad for a personal lines underwriter at Dominion of Canada at that time, a trainee program. Had no idea what that meant. Went in and got interviewed by a gentleman that was running that operation, who actually quite inspired me. Like I saw this guy and I saw his values. I saw what he was talking about. He's actually one of my best friends today. Lives in Toronto, but I think he attracted me to the industry. I kind of aspired to be what he was across the table, and I joined Dominion at the time. Left Dominion and joined ING, and my career in Vancouver really for 6 years was on the underwriting side, both in personal lines, commercial lines. Worked my way up into management roles. In 2005, I got the opportunity with my fiance to move to Toronto. I was working as the national director for commercial lines research and development. So back in 2005, started implementing a lot of our early rating systems in commercial lines, a lot of the systems that we're developing with brokers, so IT platforms, products, services, workflows, etc. I learned a lot there, had a lot of fun. 2007, became the VP Finance for Ontario at Atlantic Division at Intact Insurance. So I was working very closely with Debbie Kulkachini and the Ontario leadership team at the time. Debbie asked me in 2009 to head up the Durham region for Intact Insurance. So one of our largest distribution arms on the Intact Insurance side, to lead the P&L from top and bottom. Worked with 150 odd brokers in the region, 300 employees, and loved that role for 6 years. It was probably one of the most fulfilling roles that I had in the organization, because really you touched every part of the business in that position. The board and Charles, and maybe this kind of dovetails into some of the things I think you want to talk about today. In 2015, while I was in Durham, asked me to start looking at emerging consumer trends, particularly around some of the developments that were happening in the sharing economy at the time. I took a look at what was happening there and struck our partnership at that time with Uber and with Turo, and worked for the next year on creating insurance products for those companies, which was a long, hard road, both from a political perspective, local, provincial governments, regulators that didn't quite understand what the system was and how to amend products to develop it, but also with the industry. The industry had a lot of varying perspectives on how this exposure should be covered. So I did that for a year, was successful in getting that off the ground. And then the board said, great, you've helped us with the sharing economy. Why don't you take $250 million and figure out how do we get better plugged into the external world, and figure out our strategy with Intact Ventures. So, I formed our ventures division at that time. Have been leading it now for the last 6 years, and we've made over 30 investments globally, deployed over 350 million in capital. I can talk to you a little bit about our strategy there as well. In 2019, our CEO, Charles Brindamore, asked me to look at developments in the artificial intelligence area. We had done a lot in Canada at that point, but he asked me to look at what was the next step or the next development with AI. We can dig into that a little bit as well, but I recommended that we open up a shop in Asia. And Charles said, fantastic, if that's your recommendation, you got to go and do it. So my wife and I moved to Hong Kong in 2019, where I was still running the ventures division, but I was also opening up our first artificial intelligence lab outside of Canada. And then after the RSA acquisition in 2021, I was asked to come back to Canada and take on the CFO responsibilities as well as still running the ventures division. So that's my 5-minute summary, Brad, of my career path thus far.
And I learned something new, Karim. I didn't know you started at Dominion.
I did.
I thought
I was Dominion. Actually, Dominion, because of their Safeco roots, I think was a really, really good underwriting training ground back in the day as well, and a lot of good leaders at the organization at that time that I was able to interact with.
No question. And actually, I'm going to take you back to your UBC finance days, and as your if you could put your CFO hat on for a second, I think we're all reading about record inflation right now. Most of us have never worked in the insurance industry through a period of inflation like we're seeing at this point. And I was just wondering if you could give us your view on how that's going to impact the industry, maybe short term or longer term, or what impact it might have.
Yeah, I think, for us, inflation plays a role, and it's probably one of the top 2 or 3 things on my radar as we think about the impact to our industry and how to prepare ourselves on a go-forward basis. And I think you're right, Brad. There's short-term implications, but there's a lot of long-term things that we need to keep in mind as well. And maybe just to highlight a couple of the things that we pay attention to. I think first, this is a people business, and the impact that this has on our workforce in terms of their purchasing power going down in the short term as the inflationary environment hits, and also what that's doing to the labor market, where it's not just Intact, but across the entire industry and across many industries in Canada and globally. We're facing labor shortages. We're at near full employment in Canada, and trying to attract the right talent as we're growing our business by 70% in Canada is really, really important, because we want to make sure that we're still providing good service to our brokers and our customers, and that we're able to deliver on the promises that we have. So, I think from an employer perspective, it's something that we need to manage in the short term to make sure that we can still attract and retain. But I think the impact on our business is far more complex, and it's interesting because you see the trends, Brad, that have happened south of the border, right? Particularly in the auto insurance side. And we know Ontario already is the richest jurisdiction in terms of the auto insurance product that we have in North America. And making sure that we're keeping tabs not just on supply chain related inflation. So, right now we're seeing the cost of OEM parts, for example, go up because of the supply chain distortion that we have. So the price is increasing. Therefore, cycle times are increasing and our rental car days are going up. It's important to distinguish between what is actually structural and what is inflationary in the short term that eventually will go away. Because if it's structural, you have to price for it, and you have to make sure that you're not caught over time by not actually looking at these trends. And then you have to separate that from supply chain and other things that you could potentially manage through our size, our scale, and our ability to be able to vertically integrate in some of the areas that we have through onside with our restoration business, et cetera. So, I think inflation is here. It's something that we're monitoring. We haven't seen it creep up in our underlying results yet. I do feel comfortable that we're pricing for it accurately in the medium term. But long term, I think what really worries me, not just at Intact, but as a Canadian, is around the economy itself and the potential of stagflation. And that's something that I don't think any of us have really lived through in Canada, where you see a paradox between inflation going high and the economy then slowing down, but unemployment rising at the same time. And that's really a situation that you don't want to find yourself in, because many of the tools in your toolbox, i.e. money supply, interest rates that you would use to control inflation, will then cause even higher unemployment. And if unemployment's going up, this is the paradox that you have. And I think that's why, Brad, you saw in the last federal budget, you saw a lot of the business leaders in Canada, both on the banking side, Charles on the insurance side, and others, encouraging the federal government to really prioritize what's most important. Because, it's one thing to have a very big balance sheet during an environment like COVID, where people need help, people need assistance, and you need to be in front of it. But longer term, you really need to start controlling the finances and be very clear in terms of where the assistance is needed or how you're going to be investing in a growth-related economy in order to be able to increase the growth and increase the well-being of all Canadians over time. So I'm still optimistic in terms of Canada's future, but it's something that definitely keeps us up at night.
Oh, definitely. Well, that was a very in-depth answer. I wasn't expecting that much detail. And I think when you say stagflation, do we not go back to the prior Trudeau? I think that might be a point in time, but we won't get into that. You were talking about Canada, but let me take you back to 2019 then. You told Charles that you thought Hong Kong would be a great place to set up the second Intact lab. Why Hong Kong from an insurance perspective?
Yeah, so I think if you go back, Brad, like Canada for the last 40 years has been at the forefront of AI research and development, without a doubt. I think what you've seen with Jeffrey Hinton, the University of Toronto, what you've seen coming out of Quebec, it's unbelievable in terms of what we've been able to develop with respect to deep learning. You've seen a lot of companies and institutions open up shop in Toronto and Montreal in particular in order to tap into our talent and our R&D capabilities. So we're very bullish, I think, first of all, in Canada, right? We have 200 AI experts located here in Canada. But I think, data is such a core part of our outperformance over the last generation. We've outperformed the industry by about 700 basis points over the last 10 years, in large part due to our belief in data, the ability for us to utilize data to outprice, outperform, create better products, and compete. And if you look at what's going to happen over the next 20 to 30 years and the importance of data and AI, I think the concept was, while we believe in Canada, we probably want to be close to where we think the cutting edge research and development may come in the next generation. And if you look at what China had committed to in terms of R&D spending in AI, how they thought about AI being a clear transformative effort in terms of developing the middle class in China, as well as the amount of venture capital funds going into AI-related companies in China, that was where I thought, we should probably open up a small lab there to be closer to that, as opposed to, the UK or the US, where the R&D was quite similar to what you were seeing in Canada, and it was already very closely tied in anyway. So we could learn from that while being in Canada, but China, I think you have to be a bit closer to what's happening on the ground. Now, remember that it's our customers' data that we're using, right? This is not us selling insurance in China and using Chinese customers' data. So top of mind for me was data security, data privacy, and intellectual property. And because of all of those reasons, I was not comfortable opening up a lab as a first step in mainland China because of those issues. But, looking at Hong Kong, and actually I was in mainland China, in Shanghai, looking at opportunities there back in, it must have been January 2019. And one of my insurance broker friends back from the Durham region, Adam Keung from New World Insurance, called me and he said, look, I know you're working on this project. Why don't you look at Hong Kong as an option? I'm going to be in Hong Kong for the Asian Economic Forum. Meet me there. I said, fantastic, Adam, I'll meet you there. I'm just in Shanghai anyway. And he took me to a couple of the universities. He introduced me to a few government officials. He took me to a couple of R&D labs. And what I quickly realized was, 4 out of the top 100 universities globally were located in Hong Kong, that the amount of research and R&D talent in Hong Kong was quite high, that they had the world's most valuable AI company located in Hong Kong. And the IP data protection issues that I faced in mainland were not an issue in Hong Kong because of the British rule of law and common law system that they had in place. So because of all of that, we decided Hong Kong was probably a good place to be located, where it's close enough to what's happening in mainland China, but still far enough away where we could still make sure that the data is protected and secure.
Okay. That's, again, more than I would have thought, and what a great tie back to the small world of insurance.
It is for sure. And, it was a very interesting experience in Hong Kong as well. I really enjoyed my time there.
Wow. And having been there through COVID, I'm sure you could tell us a few stories about that, but again, we've got a lot to cover today, so we'll get to there if we can. When you look at the new ventures with your managing director hat on there, what is it you're looking for? You said you've made 30 investments. I'm sure that's a broad range, but are there certain things that jump out as really important for you when you're looking at a potential new venture?
Yeah, well, I think, Brad, like to start with ventures, though, I need to kind of answer the IFC strategy question a little bit to help you guys understand, why we look at that. And, from an Intact perspective, we look at emerging trends that are happening globally, right? We look at consumer trends, we look at technological trends, and we map out our strategic roadmap for the next few years. And we try to have theses and responses to the trends that we're seeing. And, internally, we have 20,000 phenomenal employees in Canada, 26,000 globally, and they can handle and tackle most of the issues that we have, as well as take opportunities of things that we see in the marketplace in order to leverage our core competencies in order to outperform as well. But where I use ventures as a lever, and where Charles asked us to use ventures as a lever, was really not focused on the near term, because we have a lot of good people internally that can do that. Utilize the limited capital that we're investing to be focused on long-term disruption. So look at the strategic roadmap, figure out where you can help be an accelerator, or where you can help us close potential gaps long-term to protect us from disruption or to learn. So thinking about that, the first goal really is to try to figure out where you think disruption may come from. And we picked 4 thematic buckets where our first 2 funds were focused on. And right now we're going through the strategic exercise of determining where our 3rd fund will land. It's probably going to be quite similar to what I'm going to talk about anyway, but there might be slight nuance differences. But the 4 areas that we decided on were mobility. And early on, mobility was described as how customers would get from point A to point B. I think mobility has now also evolved to look at how will goods get from point A to point B through supply chain and other areas. But mobility was definitely one area that we thought, we could be disrupted with electric vehicles, with autonomous vehicles. 40% of our book at the time was in auto insurance. So there was a direct link there. The second is around data and AI. And again, remember, this is 2015. I think quite honestly, right now, I probably wouldn't have data and AI as a vertical. It's probably a horizontal part of all of our investments, because you can't have investments anymore without looking at that. But at that time, that was a vertical that we thought was quite important. The third is around the sharing economy. And it's not just the sharing of assets, but it's also potentially the sharing of risk. So when you think about insurance balance sheets, are there alternate ways that capital may flow in or flow out to make companies more efficient? And that could be a potential threat in terms of how we capitalize our business, in addition to the sharing of assets, I think, is the area we were looking at. And then the last was distribution. And I think our belief has always been that the entry point for disruption will be distribution. So how do you take a look at how people want to consume insurance in the future, the new models, et cetera, and stay close enough to that to invest? So I think out of those 4 areas, Brad, we try to look at companies that may either try to directly disrupt the insurance value chain, or even more likely, indirectly disrupt the insurance value chain, because these aren't companies that wake up every day thinking about Intact and Geico and Progressive. They're just trying to build a great autonomous vehicle or build micro-location weather sensors, et cetera. But if that technology actually works, it's going to have a profound impact on how we underwrite, price, collect data, and create products. So that, I'd say, is the general theme in terms of how the venture fund was formed and the areas that we look at.
Okay, and that's a great segue to what I'd like to ask you next, which is around the biggest drivers of innovation. I keep hearing about customer experience, but I also know it doesn't happen without the technology that allows for it. So is it technology? Is it customer experience? Is it a bit of both? And if it is both, is one of them leading the other?
Yeah, it's a bit of a chicken and the egg, huh? And we've been in a profound, decade of change. And, I think we've been focused really on capturing opportunities by 3 kind of things that we see, Brad, to kind of lump it together. I think the first is, obviously, consumer expectations are changing, and they're changing very fast, and they're changing over and above generally what we can see suppliers being able to provide, and that's across all industries. That's just not insurance related. I think the second is obviously software. So what's happened with software over the last 2 decades has really changed how people gather info, share info, where they move, how they live, et cetera. It's really created some profound changes. And then I think the third trend is that data has really exploded while being democratized, right? We've seen, some stats I'm sure that you guys have heard of, like 90% of all of the data created in the world has happened in the last 2 years. And it's going to increase tenfold in the next 2 years. And at the same time, the cost of warehousing this data has dropped by 90%, and data processing capabilities have gone up by 30-fold. So if you take all of these trends together and you try to figure out what's happening, you have consumers that are looking at us compared to the experiences they're getting in other industries. Quite honestly, they're not satisfied in terms of the output that they're getting from the insurance industry globally. And meanwhile, we've got this whole slew of new data sources popping up all over the place and new business models being formed from a technology perspective that we've got to adapt to, and we've got to harness the power of to create better experiences for customers. So I think for me, Brad, it starts with the customer, but the technology development over the last 2 decades has allowed all of this to really, really accelerate compared to what we saw in the 50, 60 years prior.
Sure. And actually, with the customer expectation, as you know, having worked in Canada, regulation is a big piece of that. So you just mentioned that you don't feel we're doing a good job as an industry of meeting those customer expectations, but is that more of a function of underdeveloped ability, imagination in the insurance space, or is it maybe a little bit of a collaring on the speed from the regulatory standpoint? And again, I'll ask you, you can respond to that from an international perspective, so you're not calling out any Canadian regulators, but how do you feel about that?
I'm mixed on this one, Brad. So I'll answer this in a couple of different ways. I think first, if I put my ventures hat on back in 2015, 2016, and this is before a lot of the changes were made in some of the regulatory frameworks that we've seen in Canada since. I was always talking about the need for regulators in Canada to be more principle-based rather than being rules-based. And generally, when you looked at international regulators that were successful, you found that philosophical concept being first and foremost. I think Canada's done a lot of good in that respect since 2015, first of all. So I think that needs to be the first place that we start. I think creating sandboxes and allowing innovation to happen from a regulatory perspective is critical. But I think regulators, to give them some credit, are there to protect consumers. So it's nice to say create a sandbox, but they got to make sure that the promises and services that these new entrants are providing are viable and they can deliver on those promises. So, I think sometimes we also blame the regulators far too much for problems that are our own, because it's just easier to point the finger. And as long as you create the sandbox and you ensure that either the new entrant is tied with an incumbent that can deliver on the promises, or you do then have to put some regulatory burden on the new entrant to make sure that they can deliver, I think that's fair game. And I think the regulators are finding a good balance with that respect today. I think it's also important to make sure that when we create these systems or processes, we don't give an advantage to one group versus the other. So you can't say, okay, new entrant come in and actually start to innovate and create new products, but incumbent that has 5 million customers, you can't play in the sandbox to innovate. You got to apply this to 5 million customers across the country. It doesn't work. It's not customer centric, and it doesn't allow the company to then innovate in a way that makes sense, and they can test and iterate, create MVPs, and then try to incorporate that across our entire portfolio. So, I think for me, that's some of the learnings that I think the Canadian regulators have appreciated. They're moving towards. But I'll give you a real example, Brad. Like back when we were creating the sharing economy products, we had to work with regulators quite a bit on creating things from scratch, right? And quite honestly, the industry wasn't super helpful in terms of actually thinking about what the consumer needs were in creating products and services and helping influence the regulator in a way that made sense, right? If you look at, the needs for a company like Uber at that time, They had thousands of customers across Canada. They had thousands of rides every day, and they needed to ensure that every single ride was protected. And the only way they could ensure every single ride was protected was ensuring that they bought coverage on behalf of every single person that was operating on the platform. Because today, you and I could be Uber drivers, tomorrow it could be 5 other people. It's not static. And understanding the customer need and understanding that how to protect Canadians as they participate in these platforms, I think is important, so that when you stand in front of a regulator, you say, this isn't personal lines, this isn't commercial lines, it's something in the middle, and let's figure out something that actually works, as opposed to saying, oh, no, let's try to slot this into something that we already know, which is the industry's problem, not the regulators, and say, let's require 20,000 individual drivers to buy personal lines endorsements, even though they may only drive for Uber for a month. Like, that kind of thinking, I think, is more industry driven as opposed to being a regulator problem, but it's easy to point the finger at the regulator.
Yeah. And it really highlights the importance of understanding policy wordings. I mean, at the end of the day, that's what it comes down to, right? It's, I only know the OAP, but it was changing like one section of that this whole thing was around trying to allow consumer expectations to be met.
Brad, we could spend hours talking about how long it took us to change probably 2 sentences in the definition of a fleet, which was the first thing that had to change before any product could get created. And then the amount of time that even I spent reading the accident benefits regulation in Ontario around priority of payments and how this would work. Like, you're right, you have to get into the weeds and be technical, I think, when you're trying to deal with creating changes like this.
Yeah. Okay. Well, let's get out of the weeds for a minute. I'm going to ask you a personal question. I see on the shelf behind you, Wine Bible, are the only 2 words I can see. So Shiraz, Pinot Noir, or Cabernet?
My palate changes, Brad, depending on how I'm feeling, the season, my mood, where I'm living. I would say, coming back from Hong Kong, where the climate was very hot and humid, I started drinking a lot of lighter, more organic style wines, just because it was a bit fresh, a bit crunchier. And I think even coming back to Canada, that's kind of my palate today. So out of those 3, I think Pinot would be my favorite right now.
Okay. And this does have something to do with the future of insurance, because any insurance event, there's usually some sort of wine or something. Anyway, looking at the technology piece again, with the explosion of sensors and connected devices and the data that's going to produce, we know that's going to have some opportunities and some risks. So what do you see as the biggest challenges in AI that are facing insurance today?
Well, I think that's a big question. Like, I think the issues that we have, or the opportunities we have in AI, some are related to sensors, some are just utilizing the data that we have and the opportunities that we have today. But I think, look, it all again starts with the customer experience, right? What we're trying to do is leverage AI to help improve the customer experience, as well as to make sure that we can improve on pricing, risk selection, as well as in claims to accelerate cycle time. And to improve call quality control, et cetera. So, when you think about AI, it sounds very complicated, but it's just another development when you think about linear regression models in the past, to decision trees, to machine learning, to deep learning. This is all just a function of how do you actually use data to make better predictions. And as we already spoke about, with the amount of data that's exploding today and available, you can't use traditional models to actually make good predictions in the future. So your processes and internal processes need to adapt in order to be able to harness that power, which actually creates, I think, better customer outcomes, because you're now able to hyper personalize and develop things actually based upon an individual's own behavior and product needs, as opposed to generalizing it and running into some other issues as well. So, I think for us, it's about selecting the best risks at the best price, and it's also being efficient on the operational side, both in terms of sales and claims. And I'd be happy to give you more examples there in terms of some of the things that we're working on or thinking about in that area. But how do how do you take the data that's out there and utilize it? I think one of the first use cases that we had with big data, well, actually, I would say two. The first was, incorporating machine learning into our auto insurance pricing. We were very early adopters of that. And in fact, when we talk about regulators, you think about black box rating and you think about inputs and outputs, the regulators were very receptive around the notion of using better data and personalization to actually price risk. And they allowed us to use machine learning and pricing for many years now. So I think that's a great example. And the second would be with telematics data. And that's maybe related to your sensor question, right? I think in auto insurance, you've seen the notion of sensors or telematics be quite successful in terms of adoption, because I think consumers can actually draw the correlation between how I drive and my behavior actually corresponds to a lower rate. So they see the value generation along the way. I think in some other areas, I'm still very optimistic about sensors, but you just haven't seen consumer adoption take off as much. And, I would use the home as an example. We invested in a company in ventures 6 years ago around, water leak detection, et cetera, around the home. Very interesting company. We doubled our money with it, very happy with the financial performance, but we did a couple of proof of concepts with our customers, and customers just weren't willing to pay for it. And, I think that's a bit of the problem around property and commercial insurance. You don't have a single product like telematics that can just, you could utilize to create behavior or monitor behavior and then price the risk. There's many, many sensors that you need in a home or in a commercial business in order to come to that conclusion. And then combine that with the consumer demands just is not there yet where they see the value, even outside of insurance, of installing this at scale. So it's hard for us to tap in and utilize that. But I do think in the medium term, I'm very bullish about sensors and the impact that will have on creating better products for customers.
Okay. Now, you just mentioned a company from your ventures that you doubled your money on. So obviously that was a good one. But are there any technologies that you see as fundamental to AI in insurance? And I would like maybe metadata and how you can get answers quicker. Is it LiDAR for autonomous vehicles? Is it emotional AI for claims processing and fraud detection? Is there anything that you see as really fundamental to building out AI in insurance?
Yeah, I think when we look about that, there's foundational areas that we're spending time on that I think is just critical for future development, right? And I think you look at image recognition or expertise around image recognition, as well as natural language processing as being, I think, two foundational areas within AI that you need to have expertise if you're going to play in this space. And if you think about the relation back to insurance and potential areas that could be utilized in, well, image recognition, think about auto insurance claims or property claims. And the amount of time and effort right now that it takes to actually categorize vehicle damage, try to estimate vehicle damage, trying to figure out if it's a total loss or not because of hidden damage behind the bumper, the amount of time and effort this takes for a customer taking the car back and forth to a body shop, the increase in cycle time, the increase in rental car costs, and then the overall indemnity costs. Like the opportunities there to actually utilize AI within image recognition and to be able to tag accurately, to be able to make prediction, and then to be able to then figure out where that customer needs to go. I think there's so many opportunities from an AI perspective. So definitely that's an area that I think is important for us to invest in. And then I think around natural language processing, I think there's so many opportunities on terms of how we communicate or interact with customers today. And there's so many ways that customers and brokers interact with us. One example would be, with commercial insurance, we would love for everybody to go through, a single entry, multiple carrier system that we've been talking about for 20 years to improve workflows and processes. But until that happens, we get paper and fax and email submissions all the time. And is it the best use of our time or most efficient and really meeting the developmental needs and interest of our underwriting assistants and underwriters to be reading through these applications and keying in information and following up with brokers for missing information? Or can you use natural language processing and image recognition to be able to capture the information on these apps, automatically populate our systems, perhaps build out third-party feeds to get the missing information back, and automatically give a quote back to the broker? Like, these are areas, again, that I'm giving you 2 use cases, but there's probably 20 use cases as you have foundational expertise in these areas that you can apply across the organization.
Perfect. And I'm going to jump into our audience questions now. Reza Rafi from Vancouver had a question, and it had, how do you see the role of AI possibly addressing some of the issues with labor shortages by improving efficiencies, which you kind of touched on there? And more generally, do you think improved efficiencies arising from the adoption of AI could reduce costs and help manage concerns around inflation?
Wow, those are 2 great questions. And I thought the question would be, are the Canucks better than the Leafs? And the answer is yes. So we'll start right there. But look, I think, let me answer that first with my Intact hat on, at least the first part of your question, and then I'll be a bit broader. One of the notions or issues with AI when we talk about it is it freaks people out. And it freaks people out because they think that when we talk about AI and operational efficiency, it means job loss. And, I think fundamentally when I put my Intact hat on, and I look at the growth trajectory that we've had over the last 21 years in Canada, growing now to 20,000 employees, I can honestly say when we talk about AI, it's not about job loss. Right now, I've got over 1,000 vacancies that I'm hiring for, even though we have 200 AI experts and 250 models in production. So when I think about AI with my Intact hat on, it's about how do I create operational efficiency in areas that aren't really value added and really supports the developmental needs of individuals that want to do different type of work. And to me, there's always going to be different type of work that people can do, and it helps them upskill, uptrain, earn higher salaries, and be better engaged within their career path as well. So, that's my Intact hat on. I can't speak for other industries. Perhaps in some other areas, they are looking for strict operational efficiency. You can think about, RPA and robotics in the car manufacturing industry, and that likely is around using robots to replace people. But I can say in our industry, that's not the case at all. So, I think that's generally how I would think about the utilization of AI and the people aspect. And can you utilize that to fight inflation? I think that could be an area to look at. And this is where I'll put my Canadian business person hat on. And I really, really worry about Canada's overall lack of improvement in productivity over the last 20 years. And forget about COVID and forget about what's happening today. You've generally seen Canada lag from a productivity measurement perspective compared to the other G8 countries. And that is fine and dandy. I think when you have high prices of resources and overall your GDP is going up because the price of wood and oil and everything else, kind of masks what's happening from an underlying perspective. But I think for us to be competitive globally as Canadians, we really need to figure out how to improve productivity, which will help on the inflation angle. And I do think AI and more investment in R&D and science-based technology is definitely one of the areas, if I was advising the federal government around growth in growth budgets in terms of where to invest or spend money, is definitely an area I think over the medium term to invest.
Okay, and I'd like to jump on that comment as maybe from a Canadian business hat standpoint first, and then from an Intact perspective. With the increasing number of black swan incidents, whether it's COVID, whether it's the pandemic, whether it's climate change, the war in the Ukraine, there's a lot of things going on. Do you see technology assisting insurance in meeting some of those needs? And I know that's a very broad question. I don't know if you can even answer it, but I'll just throw it out there since you mentioned COVID.
I'll answer it, but I think maybe it's a bit different than how you described it, Brad. Like, I think for me, at least, black swan, or if I think about black swan events, these are areas that, they come as a surprise. It's a major event. You could perhaps rationalize it a bit after the fact, but like, for me to be able to predict or utilize technology to help us from an insurance perspective for black swan events that are still unknown would be very hard to do. But I do think, though, at least for me, maybe it's not black swan, but it's about what are the risks or risk exposures that we face as an industry, and how do you utilize technology in order to be able to better protect and create solutions? Like, look at the announcement that we made last week in BC, for example, right? We made a couple of changes in that province. I'm a proud Vancouverite and I've been living the earthquake, issue for the last 21 years. But we're in a situation right now in that province where it's really not feasible for any participant. Forget about the industry. Only 53% of British Columbians today purchase earthquake insurance. That's a big problem, because in the event of a disaster, there's going to be a lot of people that aren't protected. And for those that actually buy earthquake insurance, they face very high deductibles that many of them probably can't afford in the event of a quake. So that's an issue. And looking at your black swan type question, these are all built on models. And you can look at different models saying this is a 1 in 500 year event. It should be a 1 in 700 year event. You have trillions of dollars of exposure for the industry out there. And what's your probable maximum loss if that earthquake hits? And then you buy reinsurance against that. But you need to make sure that your models are pretty good, and the industry models are pretty good in order to protect your exposure, which is why, we decided to cut our exposure by 40% last week, to make sure that we're there to protect Canadians in the event of an unforeseen event. But this is where I think the technology today is better than 15 years ago when we were using EQCAT models and other things to try to predict what the maximum exposures are. And the reinsurance partners have been great in assisting in these modeling events as well. But I do think when I think about existential events or things that, from a risk perspective, that are important, cyber, quake, and others, definitely technology plays a huge role in modeling and helping us be more efficient and to be better risk managers. But there's still a lot of unknown out there, and that's the problem.
Yeah, and I think the reason I phrased it from a black swan perspective is that one of the things that makes AI so powerful is it can look at data and make connections that we as humans generally, or not generally, sometimes might not make, or are counterintuitive to what we might think. That's why I phrased that question that way. But I guess put your ventures hat back on for a second. What have you come across in the AI field that kind of shocked you? Whether it's about insurance or just general business, that was like, wow, I never thought of that.
That's a tough one. I think, look, I think as a consumer, or putting my ventures hat on, and I think part of why I think ventures is such a fascinating field is every day you're meeting with entrepreneurs in fields that you have no idea, right? Like, this is not, you're not just talking to insurance executives about insurance, you're talking to people that are doing some really tremendously interesting things. And I think for me, Brad, it's not the aha moment in terms of how AI is utilized. For me, it's always the aha moment of, wow, you've actually created a product and a service that's so simple to use. It's so transparent and seamless. How did you manage to do it? And generally, you find that data and AI played a role in helping deliver the service. And the aha is holding that iPhone in your hand or whatever, and looking at how accurate the Google search is, as opposed to saying, wow, this is a really great AI development that you've made from a research perspective, and how are we actually going to use this in production? Like, I know, maybe shifting a little bit, there's a question around blockchain in the chat as well, from a service delivery perspective. And again, I put my insurance hat on. I've always said that I think blockchain almost has felt for the last 10 years like a solution looking for a problem, as opposed to vice versa. And the reason why I mentioned that is, I think blockchain probably works in a lot of different aspects, but the fundamental notion of blockchain is it's a decentralized ledger that relies on trust with various parties to actually play a role. Like, that is the crux of it. Like, if you're looking for a point-to-point solution between two partners, you could utilize blockchain, but why would you? You could find much cheaper and efficient and perhaps less sexy alternatives to actually create a distributed ledger or to create a feed between two systems in blockchain. And I think in our industry, this is where people have been running around trying to utilize blockchain in a lot of respects that I think it doesn't make sense. But I do think there might be some use cases that do make sense. I think in marine insurance, which we don't do much of, you've seen some pretty interesting things happen there. I think in supply chain insurance, there's some very, very good things from a blockchain perspective around monitoring the delivery and the movement of risk, et cetera. And I also think, from a real life example perspective, I've always wondered, when you take a look at MVRs, like that to me would be, or claims reporting, that would be a prime example where perhaps blockchain does make sense, because this relies on information from every insurer in the industry providing data into a program. So there's different nodes that are centralized, and you can cut the middleman out to actually share data and then retranspose that out. So perhaps there are some use cases that make sense, but you also need industry will and all participants to want to move forward, which sometimes is a challenge as well.
No question. And since you mentioned MVRs, I saw another question in the chat asking how Intact Ventures looks at autonomous vehicles, and they brought up Gatik as, yes, thank you, as one of the examples.
Yeah, so I think early on, and remember, put your 2015, 2016 hat on when I'm answering this question. I'd say, venture capital, one of the problems with venture capital is generally it's very frothy. There's like a very interesting idea, everybody runs to it, a lot of capital goes in. We even saw that in Canada. A recent example would be what happened with all the marijuana companies over the last 3 years as well, right? But the same thing I think happened in 2015, 2016 with autonomous vehicles. And, at Intact, we looked at the impact that autonomous vehicles would have on our book of business, because we had such a large auto insurance book. And I think our conclusion was, first of all, it's going to take more than a generation for this to have a profound impact on our overall book, because you need the entire car park to switch. It's not like, even if autonomous vehicles are there tomorrow, that all of us are going to go sell our cars and buy autonomous vehicles. Like there's a natural evolution that happens. So it's probably further out from impacting our business than what people were predicting. And even when it does happen, it's not necessarily a certainty that the entire insurance risk goes away and there are no more accidents on the road, et cetera. And we could talk more about that, Brad. You can ask a follow-up if you want to go there. But I think that's a whole other kind of an issue that we needed to sort through and make sure we educated people on. But from a ventures perspective, we're investing in the long term. We're investing in things that may be disruptive. So even putting my hat on around this may take 15, 20, 30 years, we definitely made some forays into the autonomous vehicle space. We invested in a company called Voyage, which was, building autonomous vehicles in Silicon Valley. But what we loved about Voyage was they actually had cars on the road. So rather than dealing with all of the issues around and complexities around, figuring out routes in Toronto and regulation and insurance and all that, they actually had an investor that put in money into the company, but also allowed the Voyage vehicles to drive on private roads in gated communities in Florida. So these would be retirement type communities. And you think, okay, well, who cares? Like the retirement community would have 50 homes. How much learning would you do? These retirement communities had hundreds and hundreds and hundreds of miles of road. So not only could they get real life data today from the vehicles that they were driving, but it actually served quite a big need for senior citizens living in the community to get from point A to point B. So while we were optimistic on autonomous vehicles, we could actually start looking at the Voyage vehicles, start getting data out of those vehicles today, and start thinking about how does the product pricing and underwriting and data collection from these vehicles need to change in the future, which is why, I worked quite a bit with the IBC on creating our blueprint around how the auto insurance system needs to change when there are autonomous vehicles on the road, right? So how does the liability policy change? What do we do in the mixed world, et cetera? But that'd be a clear example of something that is frothy and interesting, something that may be disruptive. How do you invest in a company to get the learning? And then how do you transpose that back to today? And I think Gatik, that you mentioned in your question, we're super bullish about Gatik. This is a company that we invested in over a year ago. Phenomenal founders, Toronto-based company. but they're doing excellent things around the movement of goods from an autonomous perspective for businesses today. And the contracts that they have in Canada today, as well as with Walmart down south of the border, very, very, very interesting in terms of what they're doing.
Okay, and I'm noticing our time here, and I could talk to you for a few more hours, but I just want to let everybody know who's on the call right now. You will get a copy of this call delivered to your inbox tomorrow, so you won't miss anything if you have to jump out, but hopefully you don't. Just talking about connected vehicles, the Internet of Things. A recent McKinsey study said they expect to be 1 trillion devices connected by 2030. I don't even know how that's possible mathematically, but there you go. But when you look at that, what do you think is the greatest opportunity from an insurance perspective? Is it around smart homes and smart cars working together? Is it smart cities trying to manage traffic flows and things like that? Or are there other things that really excite you from an insurance perspective?
I think there's things that excite me, and there's things that make me nervous, and there's things that we need to sort out. So maybe I'll attack it in those 3 areas. Like, I think what excites me goes back to what we were talking about earlier, Brad. Like, it's the same as the sensor question to a certain degree around, as customers find value out of the products and services they buy. I think it allows us so many opportunities to create more localized and personalized products and services. And we focus a lot on indemnification, but also from a prevention perspective, right? That's ideally, if you can avoid the loss and there's a joint interest in avoiding the loss, I think we can create so many interesting things out there. Like, if you look at telematics today and the fact that we could have crash detection in our telematics product so that we can expedite our claims process, contact that person to see if there's a major injury, et cetera. Like, the service is just phenomenal compared to what we could do 10 years ago. And take that now into property insurance, where you could, proactively talk to the person about whether there's a leak. You can look at what we're doing with drones in Quebec and putting them up in the winter over areas that we know get high snow load, and proactively paying for the snow to come off the roof before the roof collapses, which hurts us and hurts the insured. We're doing this today. You can look at how we're utilizing micro-location sensors from a weather perspective in Alberta to more proactively identify where we think hailstorms may happen, and perhaps in the future be able to tell those 17 homes on one street that they need to move their cars, as opposed to sending a broad brush alert to 500,000 people in Calgary that isn't very personal or effective because it's not accurate. These are the things that really interest me around data availability, consumers buying into it, but then it really allows us to be innovative and open up our thought process in terms of how we rethink our experience, both from a prevention and indemnification perspective.
And yeah, the whole prevention, indemnification versus prevention, that's a whole other area. Maybe that'll be another topic next year. When you look at new business models coming out of the Internet of Things, on-demand insurance is one of them for sure. Parametric insurance is another one. Do you see one of those being more prevalent in the future than the other? Or do you see just different areas for those applications?
I think they're different. And Brad, I honestly don't know which one's more prevalent. Like, thinking out loud, I think parametric insurance, for me, doesn't really replace traditional insurance products, at least in my experience. I think it's more so around risk management around your insurance portfolio, or perhaps it's around protecting events that in the past, insurance products weren't created for. So I don't think it necessarily transfers the insurance pool. We have an investment in a company in India called ACO, who's from my perspective, the leading digital insurer in India. But they've got products right now with Ola, which is the leading ride-sharing company in India. And if you're in an Ola cab, you could buy a parametric insurance product in your app while you're in the car that will, indemnify you or reimburse you if you're late to the airport and you miss your plane. Like, things like that are interesting. They serve a purpose for some people, but I don't think it really displaces or changes some of the traditional products that perhaps are out there. But I do think there's a home for that for sure. And you can even look at some of the catastrophic things. Crop, if a farmer has an issue with hail on their crop, it's just you figure out the forecast, you figure out the event. There's a predetermined payout. It's simple, it's easy, and it works for both parties. So I do see that. I think on-demand insurance is notionally interesting, but technically a little bit hard to do. And I think some of the issues with some of the on-demand solutions out there is around not just fraud, but also the fact that, well, maybe it is fraud. It's hard to say I'm going to turn insurance on and off for a period of time and still deal with the potential fraud or adverse risk selection issues that come in. So if somebody could figure that out, perhaps there is a future for on-demand, but it's pretty hard otherwise.
And what you just described as the ride-sharing company and the cab company, I don't know what you would call that. That's like a blending of on-demand and embedded insurance. But I'd like to jump over to embedded insurance for a second, and specifically Root. I don't know if I'm sure you're familiar with them, but last year the CEO said that we believe embedded insurance is a gigantic opportunity. We think it builds better customer experiences, and we're going to expand that product and distribution line. And what they're doing is offering insurance to buyers of cars on Carvana. How do you feel about embedded insurance? And do you see that as another thing coming out of the Internet of Things, or just the general technology space as a real growth opportunity? Oh, actually, Karim, it looks like we lost audio. I don't know how. Would you be able to pop out and then we can jump back in? We've still got about 15 minutes left here. If we have an opportunity to stay with us, we'd love to have you. I see a couple other questions have come up, so I'll be certain to let him know. Junaid, you're asking if there's a way you can reach out outside. I'll ask Karim if he can share his email address at the end, or another way to contact him as well.
Can you hear me now?
There you are. Yeah, you're back.
Can you hear me?
Yes.
Sorry
Okay.
about that. I'm not sure what
No,
happened.
not a problem at all. Somebody has asked in the chat if there's a way they could reach out to you outside of this. If you wanted to let me know offline, I can put that in the email we send to everybody tomorrow, if you're comfortable sharing that.
Sure, and also I'm on LinkedIn as well, so you can drop me a note there if you'd like.
Perfect. And your name's right there, so it shouldn't be too hard to find you on LinkedIn.
Exactly. Sorry, your last question, Brad, was around embedded insurance, right?
Yeah.
Yeah, so I was just going to say, I think it's important to be transparent around the reason why some folks like embedded or why they're using embedded, and kind of our perspective as well. Look, we were investors in Metromile, so I know the U.S. auto insurance space pretty well. I know how difficult it is to fight against brands like Geico and Progressive that have huge brand investments, brand equity, et cetera, to acquire customers. And I think if you take a look at Root and their trajectory as well, they're probably finding the cost to acquire customers to be quite prohibitive right now in the US, particularly as there's fewer shoppers, et cetera. So they're likely trying to figure out alternate distribution paths in order to lower their customer acquisition costs and to cut their cash burn as they try to become a profitable insurance company. I think for me, I'm bullish on embedded, but I think of embedded in a different way. I think of embedded, and I'll give you an example, Brad. When you think of micro or small business customers, and we can debate what micro or small means, but I'm talking about 1, 2, 3, 4 employee shops where people are wearing 50 hats. They don't even have time to think about how they're going to make payroll or how they're going to serve the customer, let alone how to fill out 50 questions on an insurance application. And then when they actually do, generally within the industry, it's very hard to get insurance because they don't have experience or et cetera. They're just starting their new gig hustle, et cetera. To me, this is where embedded insurance works, because you'll take a look at a company like Coterie that we invested in the US last year. And what Coterie is trying to do is become a B2B partner with companies like Intuit. So Intuit has the largest, small business tax program in the US. How can they actually embed and distribute products through Intuit, for example? Can they utilize some of the information that an individual files during their tax program so that we can, or companies can use it during the underwriting process to be able to offer products and services where traditionally they might have said no, and utilize this alternative data to be able to embed as the customers within Intuit. To me, this is areas that I think are quite interesting, where we can develop products and services for people that perhaps are uninsured, underinsured, have been underserviced, and really improve processes for people that really don't have the time to think about insurance. And there's probably a wide population out there that is uninsured in this segment as well.
One thing I love about talking to you, Karim, online or offline, is just I always learn so much talking to you. Some of these companies you're talking about didn't even know they existed. Another company I think we've all heard of, and seems to be on the cutting edge of AI and insurance, is Lemonade, but they don't seem to be on the cutting edge of turning a profit anytime in I guess our future. Do you think the model still holds water, or do you think there's something missing from that? And I'm not asking you to criticize Lemonade, just looking at that distribution model. Does there seem to be anything missing, or do you want to pass and go to the next question?
No, I don't like passing, Brad. So that's maybe one of my issues. Look, Lemonade also announced their intention to purchase Metro Mile, and we were an investor in Metro Mile. We're no longer there, and I was also on the board. So I'll throw that disclaimer out. So people kind of accuse me of having a conflict in my answer, but I think Lemonade were absolutely brilliant in where they chose to focus initially. And if you look at property insurance, including tenant insurance, there's probably 35 to 40 points of friction within the product itself that you can attack. And by 35 to 40 points, I mean agent, broker commission, as well as the insurance overhead. So they're picking a line of business that has wide margins to attack, as opposed to something like auto insurance that have thinner margins, number one. The second is the tenant insurance market, or complexity of the product, is a heck of a lot easier to price, underwrite, and develop products than it is on the auto insurance side, where you got to deal with 50 different regulators and you got to price for liability and benefits and things that are unknown. It's much different. So I think I'll give them a lot of kudos on where they started, the area that they tried to attack, and then they really, really did build a customer-centric digital model that made it simple, made it easy, made it quick, both from a onboarding perspective as well as a claims payment perspective. And I think their marketing engine on talking about their value prop was phenomenal, second to none. I think part of the problem, though, is you need to be true to your beliefs, I think, when you're building a company as well. And early on, there was a lot of aggression out of Lemonade around the traditional insurance model and how we were going to disrupt the model without understanding the complexity and the notion of why insurers do what they do. We don't pay claims in 2 seconds online on your cell phone for a reason, because there's something called fraud, and you want to make sure that you verify that the insured loss actually happened. So I think early on they were critical, and now they're kind of learning the realities of how insurance works in some respects. So I think that's the first piece. And I think the second is, because their marketing story was so good, their valuation shot up very high. And now they're dealing with the reality of, how do I actually grow into the valuation? And now they're in the public markets, which raises a whole other slew of issues as well. So I think because of that, they've had to move out of their core focus around tenants, disrupt the 35 to 40 points, to expanding to potentially homeowners, going to auto insurance with Metro Mile. They're now in Europe as well. So I think they're trying to grow very fast, as well as to make up kind of what their public market valuation is as well. So, kudos to them. I think they've done pretty well. They've hit some road bumps, but wish them all the success.
Wonderful. Great. Now, I know we also wanted to talk about some skills that are going to be needed in the future. We've been so focused on technology, and let's be honest, it's fascinating. So that's been great. But when you look at future skills, the head of marketing at Google Canada was asked who he thought would win in the future, companies that have the best tech or the best talent. He said a combination of both. How do you feel about that? And what talent do you think, and maybe skills, if we want to look at skills, what skills do you think are going to be most important for insurance professionals in the future?
I think it's a combination of both for sure. I don't think you can win without one or the other. I don't think we're well, my IT guy may get mad at me, but I don't think we're a tech company, but I do think technology is one of our core competencies. And technology is so core to who we are and what we need to do to improve the customer experience that I don't know how we survive unless if that is one of our core competencies. So really happy and pleased with the development and progress we've made there over the last 15 years, including with our labs. But I think on the people side, how do you actually deal with what's happening today and in the future? And I always, Brad, start with curiosity. And I talk about this internally with my folks all the time. The world is moving so fast that you need to be mindful of what's happening outside of your walls. You need to be aware of what's happening, where consumers are moving, what trends are out there, what your competitors are doing. And your competitors aren't just the other insurers in Canada. Your competitors are potentially other products and services that are being delivered to consumers. And you got to figure out how those expectations will then dictate what you need to do or don't do. And again, disruption for our industry, may come direct, which is what a lot of people are focused on. I don't mean direct online, I mean direct disruption to a part of the value chain. But I think oftentimes people overlook the indirect disruption part, which I think is even far more interesting and could be transformative. So curiosity is number one. I think being adaptable and being open to change is probably the second piece, because it's not necessarily about having 3 or 4 technical skills per se in some roles. You need to be able to have a skill set that is adaptable across different roles. And your career path may not necessarily be just in one specific area, but you got to be trained, retrained, and retooled and be open to education to be able to go into many different areas and utilize that knowledge and experience into many different places. So to me, I think those would be the 3 areas, Brad. I think it's being curious, adaptable, and open to change are probably the 3 things I'd highlight.
Fantastic. And we've got a couple of minutes left. You just mentioned competitors. So I will finish off with an audience question. What are your views about Amazon's possible entry into the insurance market?
Well, the company I mentioned earlier in India called ACO, we're actually investors in ACO with Amazon. So we sit at the board with Amazon. ACO sells insurance products through the Amazon platform. So we've got I've got a direct view into Amazon's first foray into insurance. And I think, when we think about disruption, it's something that we focus on, because if the entry point to disruption is distribution, which is what we believe, then you got to be mindful of companies like Google, like Amazon, that have very strong brands, very strong data sets, and a very strong value proposition. And whether they actually come in or not, you got to start making sure that you're preparing defenses, which is why technology is a core competency, having talent, and maybe the third area that we haven't talked about is brand. We've invested a lot in our brand in Canada ever since Intact was born. And that's a prime result of making sure that, if another competitor comes in that's strong, you want to make sure that consumers across the country know your name and know what you stand for. And that helps us not just in the direct channel, but also when customers walk into brokers' offices and need to make decisions as well. Hopefully when they see the Intact brand, that helps the broker from a sale perspective as well in terms of delivering on their promises. So watching what Amazon's doing in India, happy to be partners there, but making sure that we're protecting our core back in Canada as well.
Thank you so much. We're just wrapping up here. And you just said what's core to your brand, whether it's your personal brand or your corporate brand, openness is what I would say is the one word I associate with you, Karim, and intelligence. Let's be honest. Thank you so much for sharing your time, your insights, your knowledge with everyone on the call today. Thank you for everyone who joined us. And I look forward to talking to you again, Karim. but most of all, thank you for your time. I know how valuable it is, and this has been fantastic. I've learned a lot, and I always enjoy spending time with you. Thank you.
Great to see you, Brad. Thank you.
Okay. And thank you everyone for joining us.